Okay. Hi, Roy. How are you today?
Hi, I'm good. Thanks for having
Uh,
me.
Thank you for joining us. Pleasure for you having you today. So let's get it started. Yeah. Okay. First questions. So how do you see the Asia market in 2021, especially post COVID? And I really want to know on your view on China's market. It's quite interesting what they've done lately, especially China's market has been coming back pre-COVID level. Yeah. Do you mind if you share your point of view?
Sure. Thanks, Ara, for the question. I guess for us, 2020, if you look back, really has been defined by the COVID-19 pandemic. But if we look at the charts here, North Asia countries, which include Korea, Taiwan, and China, these countries controlled the pandemic better and subsequently recovered faster than the rest of Asia. This is evident in manufacturing PMIs, which bottomed in March and April and has recovered since. The trend is similar in Asian exports, with North Asia leading the way due to strong global demand for electronics. When we say electronics, mostly you can think of it a lot of a work from home demand, but also a recovery in items such as automotive demand as well as computer demand. For 2021, we think the recovery will now start taking place in other Asian countries outside of North Asia as well. But very quickly, just turning back to China itself, because of global demand for electronics and medical devices, it has seen its global export share rise and the currency strengthen in the past 1 year. So if we look back at 2020, stock market performances, North Asian equities were actually the top performing asset classes in 2020. So I guess the biggest question now is where do we go post COVID-19 in China? We would like to share that one of the most talked about vocabulary for investors last year when we talk about China was the term dual circulation. The term was brought up during one of the Politburo meetings in the Chinese Communist Party during mid of last year, but has quickly gained significance throughout the year. So what exactly does that mean? Dual circulation pretty much can be broken down into two parts. The first part is referring to internal circulation, which means the government's efforts to expand domestic demand, while the second part of the term could mean external circulation, which translates to developing conditions to facilitate foreign investments and boosting exports. So overall, we think 2021, the Chinese economy is likely to be guided by this dual circulation principle.
Okay, thanks, Roy. That's quite interesting. Okay, coming back to what you say about technology, I understand we've been using a lot of technology these days, especially after COVID. I believe COVID speed up the usage of technology lately in our life, in our daily life, and I notice this technology sectors have been doing really well. So is this gonna last long, especially post COVID-19? How do you see about this sector?
Right. So just building on from the dual circulation concept we talked earlier, one of the best performing sectors in 2020 for the Chinese market was the technology sector. In this chart, you can see the semiconductor market size in China, which is huge at about 231 billion US dollars. But within this market, the local Chinese vendor share is approximately 17.5%, a number which is, we think, still very low. So part of the government's target here is to boost domestic strength in semiconductors, to take up more share of the sector without having to rely too highly on external imports. So our view on the technology sector is that it's real. The government is trying to help boost the domestic sector, and it's more long term rather than just hype.
Okay, that's quite interesting. So it's going to be a long term, yeah. All right, last questions of the day. So I understand we have this US dollar Syariah Greater China Fund. Do you mind to share what's your strategy on that fund? Is this going to be still technology or we're looking or something else?
So I think the first point we'd like to make when we talk about this fund is that over the longer term, we are still quite constructive, especially given that the domestic A-share market is likely to experience continued strong fund flows. As you can see, the assets under management of institutional money in China has grown by a CAGR of 18.75% the past 5 years. Yet, on the right chart, what you can see is that despite this strong growth in the past 5 years, it remains a small part of household financial assets, especially when compared to other developed markets like the US. So apart from fund flows supporting the longer term outlook, on a sector level, we think that because China has exited the COVID-19 pandemic, the central bank and government has been able to turn its focus to more controlled monetary and fiscal policy. The financing into sectors such as property and infrastructure have been dialed down, but it continues to encourage investments into high-end industrial and technology sectors. Besides this, the government has also been encouraging investments into the consumption-based sectors. Some examples are sportswear, e-commerce, and video streaming. So just to summarize our view here, our preference lies with sectors that will be supported by government policies, and these are technology and consumer sectors moving forward.
All right. Thank you, Roy. Good to hear that. And thanks for joining me. You have a good day.
Thank you.